Okay, folks, welcome to Sunday Night's Futures Live. Hopefully my audio is okay tonight. We had an issue the other night on Thursday night. How am I coming through? Audio check. What we're going to go over tonight are the opening futures action. Then we're going to go over valuations. As we do every Sunday, I talk about the valuations using the Buffett indicator, as well as the Shiller PE ratio. We'll talk about the economic data that's coming out this week, and it's coming out big. We have a Fed meeting this week. What else are we going to talk about? Members' stock chart request. We'll go over the symbols that our members request me to review, as well as we will take some requests from the audience if we have time. But I do want to leave some time to circle back and watch how the markets settle out, the futures action. So let's say hello to everybody. Before I say hello to everybody, smash that like button, please. Thank you very much. And subscribe to the channel. Tommy, the Nose Goblin. Hi, Bob. Do you think you can check the pulse of AGFS? Sure. You got it. Smash the like button. You got it, pal. Franklin, evening, Bob. Can you send me the weekend report update? You didn't get it? I'll send it out to you. Sure. Ricardo, hello, Bob, in chat from the Smokies. Everyone's watching NCAA baseball tonight. Thanks for covering OC. You're welcome. You're very welcome. Larry, it's a steamy 93 in Louisville. Dew point 72. All right. Danny, hello. Audio's good. Thank you very much. Thank you. I kind of found the issue. It only happened yesterday. It was the what do you call it? The gain. The gain was too high. So I know how to fix that in the future. Joseph, audio not fuzzy tonight. Good. It sounds like I'm talking into a can. Not so good. Hold on here. Let me make sure that I'm good to go. I'm checking my settings. That's correct. And that is correct. It looks accurate on my side. So if necessary, I'll muffle the mic again. Big Bear, hello. You know it's humid, typical Texas, and it's just starting. Bonnie, hello. Welcome. Jody, hello. All right, let's do this. All right, so we're going to kick things off with equities first. We have the Russell 2000, and we are lifting off here. I have a feeling it's going to be a really good week. I just have that sense about it. Russell 2000 is moving up higher, spot 1.3%. This is a 15-minute chart. The NASDAQ 100. Big move up higher here. Oh, looks at, well, it's a 15-minute chart. Only up 0.17%. Let's pull back to a 4-hour chart, which I feel more comfortable with. And it's a very strong chart. Inverted head and shoulders setup on the NASDAQ 100 left shoulder, head, right shoulder. It looks as though we may break out and possibly see new all-time highs this week. We're not that far off, folks. We're very close. S&Ps hit all-time highs last week and closed there. Speaking of the S&P 500 4-hour chart, up 0.11%. A very solid consolidation here. It looks as though we are going to move up higher. Taking a look at the Dow. Up 0.5%, 0.05%. That makes a bit of a difference. The U.S. dollar, no new daily high yet. We're higher on the session because we're off the lows from where we closed on Friday. Now, we saw a very, very strong move on the U.S. dollar on Friday. I was frankly surprised to see it. Um, I'm not going to be surprised to see another move up higher. If this rally lasts more than another few days, I would be truly surprised. So, why is this important? It's because we have positions in commodities, and as goes the dollar, inversely goes those trades. So, Friday was not such a great day. Thursday was a great day. Speaking of commodities, let's take a look at gold. Down $1.10 the ounce. No new session low as of yet. I'm going to set up an alert here. I want to know if we break to new weekly lows. And we're good to go. Silver. Oops, wrong button. Wrong button. Let's try that again. Silver. There we go. Silver is down, but we're off the lows of the session. Silver fared better than gold did on that sell-off on Friday, but ultimately it did succumb. We did make a new daily high. It reversed on the session. So I'm not betting a lot on a big move higher for silver and gold until after we get economic data and the Fed announcement. The Fed announcement, the anticipation of that press conference, I believe he has a press conference this week. That may keep a lid on gold and silver prices in the short term. The 10-year Treasury note is up. It was down on Friday and yields pulled back. We have broken down below support. Let's create an alert here. I just want to see if we see selling of bonds, which we should have seen on Friday. Why anybody's going to want to buy a negative yielding bond when adjusted for inflation is beyond me. But, okay. Let's take a look at some agriculture names. Corn, up, higher lows here. This is a 15-minute chart. Let's go back to the 4-hour chart. I'm not a day trader. We're looking for the macro move. This is a good, healthy move here. We bounced off of support. So corn, this shallow correction may have run its course. I didn't want to do that. There we go. Okay. So corn right now in a very tight triangle formation. It looks as though we may break out and see a resumption of the rally in agriculture. Soybeans, not so healthy. A rough This was Friday, yes. a really rough Friday, a rough week all in all. Let's take a look at a 1 week view. Yeah, we're probably going lower here. Very poor price action last week on soybeans. Back to the 4-hour chart. Let's move on. Wheat. We'll leave agriculture off with wheat. Wheat faring better than soybeans. Trying to break out. No cigar yet. Weekly chart. We're holding support here. So the rally in wheat is still intact. We had a correction. We were overbought. Now Thinkorswim, I think it discontinued random lumber futures. Yeah, I don't know what happened here. All right, let's head on over. Let's talk about the economic data that's coming out this week and the valuation of the market. Not that it matters. It doesn't matter in the least. Let's see if there's any news. Slow news day. Usually right before I go live, you get a slew of headlines that come out, like a news dump, and nothing today. All right, so as we do every Sunday night, the Buffett indicator. We remain strongly overvalued going into the new week. We need to be at, this is a 2 standard deviation in red. We must be at a 3 standard deviation level versus the historical norm down here in black. And amazingly overvalued. But it doesn't matter until it matters. When the stock market busts at some point in time, and ultimately it will, CNBC will blame it all on the valuations, and all of a sudden it'll be a topic of conversation. Right now, it doesn't matter. The Schiller PE ratio, we are approaching the highs of the dot-com bubble, if you could believe that. And we're going into the week with, this is the S&P 500, a 37 handle on the PE ratio, with S&P real earnings going the opposite direction. So real earnings are in a free fall, yet the Schiller PE ratio continues to climb, and obviously it should. If your earnings are dropping and the stock market or stock prices are not dropping along with it, well, this is the outcome. So it really magnifies the problem, the drop in real earnings. Economic data. Last week we had consumer price index that came out very, very hot. I had a bunch of opinions as to why. The market did a complete about face on Friday. And we saw a rally in technology, a sell-off in yields, meaning a rise in bond prices. Why anybody wants to buy bonds right now? Think about what you're getting paid on yield. And if you adjust it for inflation, it's a negative return. So I don't understand why people are buying bonds right now. It seems absurd unless they need to park cash there. That's the only thing I could think about. Core CPI came in very hot. One of the opinions I heard of as to why we saw a rally on Friday in bonds was because it was the first drop sequentially. Remember, from the beginning of the year to April, you saw sequentially rising CPI numbers. This one, while came in hotter than expected, did not put in another higher high. So I think that's grasping at straws, to be honest with you. I think the short term, this is a blip on the screen. I think that overall, the dollar may proceed up higher, strong chart, short term. Overall, it's probably going to roll over, break, and this is your opportunity. Train's going to leave the station on gold, silver in the next couple of months. This coming week, we have on Monday, nothing. Tuesday, retail sales, very important. And we get another bite at the apple in terms of inflation reporting. The PPI, the Producer Price Index, that's the measure of inflation at the producer level. We also get the Empire Manufacturing Index, Industrial Production, Capacity Utilization, NAHB Home Builders Index, building permits. That's a forward-looking indicator for housing. Housing starts, and of course, we get the Fed announcement. You think he's going to raise rates? I think not. They're going to try to jawbone the markets higher by saying that inflation is transitory. You know he's going to get asked about it, especially if PPI comes out hot. He's going to stick with that transitory. The market is buying that narrative. For those not familiar with what transitory means, it means temporary. Right? World War II was temporary, but it did a lot of damage. So inflation is here. Even the government's not denying it anymore. What is transitory? How long of a period are we expecting? We don't know. I hear people out there saying that we're about to go through deflation. Kathy Woods is one of them. A gold guy, Maloney. I forget his first name. He's on YouTube as well. But he's a big gold bug, silver bug. But he's saying that we're in for a bout of deflation. I'm not seeing where that's coming from. But you know what? I'll defer to people that have proven track records. I don't see it though. So somebody's got to make a better case for me than what they're doing, especially Kathy Woods. So Thursday, we get initial jobless claims. Hopefully they continue to decline. The Philadelphia Fed Manufacturing Index, a lot of economic data coming out this week. Index of leading indicators. Get ready, folks. It's going to be a volatile week in this market. So let's get to the requests that were made. I didn't see many in the members area. I'm going to do a refresh. Yeah, I don't see many. All right, so let me get my pen and paper out here. All right, we have A, G, F, S, I, N, V, Z. All right, what else do we have? Everybody's talking about U.S. Steel. I'm going to add that to the list. We'll talk about that. All right. OG1 Kenobi, how you doing, brother? I'm late. Is the market rolling over? No, not yet, man. Not yet. You got to stay long. All right. So we don't have many requests. Bob, CNBC has been saying stock market going to bust for weeks now. Yeah, as long as we have the Fed put right now, we're getting ready to break out. I mean, we have the S&P 500 new highs. I was of the opinion that we would probably roll over on the IWM, the small caps. I still think that we will. I mean, we're still ridiculously overbought on a monthly time frame, but let's face it, all the money sloshing around out there. You have a lot of companies that they're borrowing at pretty much near zero, buying stocks, and why not? It's a smart thing to do until, of course, everything goes to hell in a handbasket and people don't realize it, and we could very well see a big blowout. It's just a matter of when. Bob, do you ever get into ultra low volume stocks such as NTWK or GRVY, or do you avoid? I tend to avoid. It's not that I won't. McCarter, I got it. VIX. Like I have Cal-Maine Foods, very thinly traded, wide spreads, but it's very volatile. It's a good trading stock, but I tend to stay away from low volume stocks for liquidity concerns. Also, I like to trade options, meaning I like to sell premium, bring in premium cash flow. So I want to know that I'm able to get in and out of a position pretty quickly and you need to have very liquid stocks. That's why I usually like to trade stocks that are over $100, $200 when I'm trading options anyway. That way, I know you have very liquid options, and I get in and I get out pretty quickly. So, to answer your question again, no, I tend to avoid low volume stocks. Big Bear, HOL. Hey, Anthony. Bob, do you know of any shipping ETFs or ETNs? It's a good question. I would look at it. I would rather than just going with a narrow subcomponent. I would just do a Google search for transport ETFs, and that'll get you the exposure that you're probably looking for. Just look at each one, see what their exposure is to by industry, and they'll break it down for you so you know what your exposure is. UONEK. That Joe, is that a request? VET? Yeah, I've seen the shippers breaking out. The log jams over at the port of L.A. Yeah, Jody, I heard about that. BlackRock buying real estate. It's not just BlackRock; it's KKR. They're buying. What they're going to do is, there are conspiracy theorists out there that believe that what we're going into is more of a feudal system where these. You heard a couple of these elitists like Justin Trudeau out of Canada. The Great Reset. You'll own nothing and love it. Well, that's the conspiracy theory that many have about why BlackRock and KKR are buying big tracts of housing, so that people will be renting from them. We have a renter society. I think it's more to do with that. Hey, Abel, thank you very much for the super chat. Thank you very, very much. Fastly, you got it, brother. Uh, I think that they need to park huge sums of cash in housing because inflation is going to drive those prices up. So it's a great place to park cash, generate revenue off of rentals, and why not? So I I understand the conspiracy theories out there, but I also understand why they're doing it. It's an inflation hedge. All right, let's do this. Yeah, China did that over in Vancouver too. That housing market's pretty much busted now. So yeah, it just it's a logical place to put money right now. So let's get to it, and we're going to be using our friends over at TrendSpider, folks. Automate your grunt work, speed up your technical analysis, and by far the most important functionality here for me anyway, besides the fact that I get the automated trend lines, and while I have a very, very good eye for support and resistance levels, you know what? Sometimes the automated trend lines just point out stuff that, you know what, I didn't even think about looking for. And it's a great second opinion. If you're new to technical analysis and you just training yourself to identify support and resistance levels, great. Draw your trend lines manually and then click the button and see whether or not you're accurate. And sometimes you'll learn a lesson. The other functionality that I like are the alerts. You'll be seeing me use them tonight here, and they keep you out of trouble. It's a rules-based approach. If this, then that. If we pull back, retest support, then we enter. Or we think about entering. If we break out, well then, okay, the alert fires off, then we look to add to our position or open a position, assuming that we close above that breakout point. So use the link below, 35% discount code below. Let's get to it. AGFS, AgroFresh Solutions. Let's go to a monthly chart first. You have a nice tight monthly Bollinger Band set up here. I like the monthly chart. You have a ton of resistance above. So here's what I like. You have a higher low on a monthly time frame. The journey of a 3,000 miles begins with a single step. So by virtue of the fact that, on a monthly time frame, this is a lot of time, a lot of patience for people to wait this stock out. The first step is that A, you need to stop going down. Step two, you need to start putting in higher lows. Check that box. Now, what's step three? Step three is you need to start breaking out to new higher highs. Where do we want to see that breakout point? Right here. $2.87. I think you can buy these shares, nibble, stay small, add more as you begin to break out above $2.87. Where do we close? $2.17, weekly chart. Now it appears as though I already went over this one, so let's remove that alert. So they attempted to break it out last week, and my alert did fire off, but I wouldn't have traded this. And the reason why is that it failed to hold the breakout point. When that alert fires off, it's just an indicator that we're above a breakout point. To me, it doesn't matter where a stock trades intra-period, in this case, a weekly period. It doesn't matter where it trades. It matters where it closes. And it did not hold the breakout point. Therefore, we would not have bought this last week, even though our alert fired off. What do we do now? We reset it. I don't use any sensitivity. All I care about is a closing week above resistance. And this is just an area where I would just begin to open up a position. I would not go all in. Up here is where I would go all in. Let's create an alert. Break through. No sensitivity. Why is there still sensitivity? There we go. Okay. And we'll keep this active for a month. So it's continuing to consolidate. It's building steam, but you still have a lot of overhead supply up here. Every rally is being sold, so it really pays to wait. Daily chart. Now we did break out on a daily time frame, as noted by this resistance level. And now we're pulling back to do a retest. I would defer to the weekly chart, and I would rather see a weekly close above resistance. You might see a retest here. You might see it hold, and it just may hold. It's not good enough for me. I want to see new higher highs. I want to see a breakout on a weekly time frame because this is a chart. A stock has been in a long-term downtrend. Now we need to see. We have our higher lows. Now we want to see higher highs. So wait for that weekly breakout. That's what I would do anyway. INVZ. Monthly chart's not telling us anything. Weekly chart. Next to nothing. We're going to need to rely upon daily chart. All right, so This is going to be a rising upper band of resistance if, in fact, this reversal bar on Friday, actually, it's not a reversal bar, it's an inside bar. This was a reversal bar on Thursday. If we begin to move up higher. So what I would focus on here is my risk first. I'd be okay with opening up a trade as long as you're going to use a stop right below support at $9.51. If it closes down below the support level, if you want to loosen it up a little bit, I'm fine with that. But have a strategy of, okay, if I'm going to buy here, I'm going to commit to myself. I'm not a big believer in setting stop loss orders. I do believe in using mental stops and commit to yourself. Write it down in a journal, whatever, that you're going to stop out below a certain number that you're comfortable with. Because if we break the support level, you got to start looking at lows last seen back here as new price targets. And if you break that, you're going into no man's land. You have no history below there, and who knows where support is. So beware. Very speculative. We don't have a lot of data to work with on this chart. Steel, U.S. steel. The monthly chart, outstanding. Big breakout, monthly time frame. Let's see where our resistance levels using automated trend lines. I'm going to take the drawings off, overlay the automated trend lines, and you can see that TrendSpider is pointing out that you have multiple resistance levels above. The next price target is going to be $33.30 on a monthly time frame. So this is a good risk-reward trade. Volume is set to come in at least the moving average. That's good to see. Weekly chart. We're not showing any automated trend lines on a weekly time frame, but what I could do here is overlay using the monthly resistance levels, monthly resistance in dashed lines on a weekly chart. So, in short, U.S. steel, let's clear off all of these. U.S. steel broke out last week above resistance. Okay, good. Very nice breakout. And I think we're moving up higher on U.S. steel. Volume last week was very good. Daily chart. The only thing negative I would have to say about U.S. steel is that we're trading above the 2 standard deviation Bollinger Band. I wouldn't let that bother me all too much. I think that we are going to move up higher here. We do have support at this volume shelf. We closed above it at 28.11 per share. Very, very, very nice chart here on U.S. steel. So to me, it looks like a buy. The VIX. All right, I'm going to go to stockcharts.com for the VIX because I have it annotated there. All right, so the VIX on a monthly time frame is an absolute basket case. The however is that we're at very strong support levels. 15, very, very strong support. Stokes is still very weak on a monthly time frame. Weekly chart. We broke support the week prior to last. Continuation moved lower last week. 15, maybe a high 14 handle is the next price target for this week. I think that we're going to see some buying down here of VIX contracts because volume last week, while we hit all-time highs on the S&P 500, volume was horrible last week. So it wasn't as if you had a bunch of institutional conviction out there buying up the market. So it makes sense. We've seen this in the past where we've seen the S&P 500 break out to new highs, yet people are buying VIX contracts just in case. So you may see some of that this week. That doesn't mean we're not moving up higher on the S&P 500. You're just going to see some insurance buying out there. And the daily chart, it's a basket case. Daily chart was hammered on Friday. Yes, we did rally back to close above support. That doesn't mean we're not going to retest support levels again this week. The path of least resistance right now for this market is to the upside, particularly on the S&P 500. The transports rallied back off their lows of the week to recapture support. So if the transports would have broken support last week, I would have been a little bit more critical of the market, but it did rally back. So I'm not that optimistic about the VIX in the short term. We'll probably consolidate, vacillate a little while, and the market's going to move up higher. The next chart up, FSOY. And again, thank you for that super chat. I really appreciate that. Okay, monthly time frame. We bounced off of monthly support. We are back above not one support level, but two. 5028 is critical support. We are off the highs of the month. So let's memorialize this. There were sellers at 5927. Yeah, you could see where they sold last week. They found support back during this week here. And I have my toolbar's hiding the date. Sorry about that. I don't know what week this was. So this is stiff resistance. What I would like is for a retrace on Fastly down here to 50.37 per share. And it can happen. Keep a little bit of sensitivity on. That's a little bit too much. There we go. That's good. Comfortable with that. FSLY. And this is one where I would keep it active for a month. I also want to know if we break through it. So our alert is set. We're good to go here. Now, I'll set another alert up here because we'll definitely want to know if we get a breakout above last week's resistance level. And we'll keep this also active for a month. Daily chart. I think you're going to get a pullback and a retest of support here. So they rallied fastly last week. They rallied up, as we know, we already went over this, rallied up and into resistance, but also up and into its third standard deviation Bollinger Band. Then you had your reversal off the lows of Thursday, inside day on Friday. I would really like to see a pullback and a retest of support. And if you get that new higher low, confidence will begin to build for the shares. but we've just drifted up higher here. I really want to see a pullback and a higher low. You had one here, but it wasn't deep. It really wasn't all that exciting. It was just a consolidation. So I'd really like to see a pullback, retest of strong support. Want to see it hold, and then get ready for another move up higher on Fastly. HOL, Helicity, weekly chart. All right, so nice weekly price action, but not great. Why? You had sellers above. Just like with Fastly, same exact thing. Rinse, wash, repeat. There's your resistance level, right? It was support back here. Now it's resistance. No great shock. So what we want to do is we want to identify, because I make the assumption when I see this, that we're going to get a continuation pullback on the shares. So if I'm accurate, where might we be interested in getting long? $11 looks good. We closed at $11.10. That's not too much to ask. I'm going to bring this down. $10.29 looks better to me because there was resistance here, here, support here. $10.76 looks good. Touch, bounce. Very little sensitivity. And we'll keep that active a couple of weeks. And then once you're in, you're going to want to set an alert at the 1205 mark because you close above that level. And then technicians, guys like me, we take note. We're looking for simple, higher lows, a retest of breakout points. Then after we enter a breakout and a close above significant resistance, then we add more. We buy on strength or a tactical pullback. Keep it active for a month or so, and we're set. Nothing else to do here except take a look at the daily chart. So it got ahead of itself, just like Fastly, same exact deal. Got ahead of itself, rallied up and through the third standard deviation Bollinger Band. If you had, this is my manually drawn trend line, guess what? The algorithm picked up resistance. Click of a button. If you were long, you would have known as a swing trade, if you wanted to just simply swing trade this, you bought down here and you wanted to know when to get out, click a button. Bam. Told you. So what I'm going to do here is just in case I don't get my pullback, I want to know if we break out above last week's resistance level. That would be significant. And we are good to go. Helicity, done. Bullish. I like it. UONEK. Urban One. You got to avoid it. If you're looking to enter a position now, way too much risk, not enough reward. And if you use the automated trend lines, they're telling you there are sellers above. There's resistance here. So you got to look for a retracement to a strong support level unless, of course, we break out above monthly resistance. I think you need to pull back here first and then take another running start at resistance. Yeah. We just eked out a new weekly high and a new weekly closing high. But you're seeing selling pressure at these resistance levels. So this one I would avoid. If you're looking for an entry point, we closed at 564. It'll be halved coming down here. Here's the weekly trend lines. This is the algorithm. Picking up support down here. I don't know if we're going to be retracing roughly 50% of the move. You never know. We could. $3 looks interesting. 346 looks interesting. I would wait for one or both of these support levels to get tested. I like the rising volume, good volume. But remember, you saw a lot of selling. So this is not a pure volume bar. There were some sellers last week. Daily chart, good day on Friday. Nice reversal bar. And it's the algorithm picking it up too. So very, very, very good support on Friday. But just keep in mind, from a risk-reward perspective, you have a lot of resistance above. So, you know, I think this is way too close to the money where we closed on Friday, the support level. $5 a share, that's the support level. And we have a closing price action, $5.64 per share. I'm not loving it, not given the fact that I'm going to overlay the monthly resistance levels here. Here, in dashed line on the daily chart, we're just shy of monthly resistance. So I'm not loving the setup here. I would wait for perhaps a pullback to this support level. Where is this? What price? That's at around $4 per share. So we'll keep some sensitivity there. And I want to know if we break this support level. Okay, so we're set. Now we don't even think about it again. We're good to go. I like the chart, but from a risk-reward entry point, I can't buy it here. I need more of a running start between historical support and monthly resistance. But if I were long for the long term, it still looks like it's probably going to go up higher. VET. Vermilion Energy. All right, so we broke out. This is the automated trend lines above multiple resistance levels. We have now broken out and closed above. Actually, this is a monthly chart. Yeah, we have closed above it. This volume shelf here. But we do have another one right above here. at $10 per share. Weekly chart. Nice base. We broke out the week prior to last. A continuation move up last week. Volume, though, keep an eye on volume. It's dropping off sequentially. That doesn't mean it can't be bought. There's your breakout and a retest. I like the weekly setup here. Just don't like the volume. Let's go to a daily chart. It's a good looking chart. Good looking chart. Where we've broken out, we've retested support levels. Again, though, the volume is my only concern. And that's it. But otherwise, I think the path of least resistance is higher for the shares. What I would be interested in, I'm not a chaser, is if by chance, and it can happen, if by chance we get another retest of the breakout point, that would be a good long entry point. And we're good to go. All right. Otherwise, bullish on the shares. MNMD. Yeah, this one fired off. I had an alert set here. I remember this one. All right, so we broke out last week, and we stopped right at this volume shelf at $3.93. Where did we close last week? $3.92. 1 penny off. Good volume last week. Really, really good volume. Very nice. Daily chart. I have an alert already set down here. It wants to go. It wants to break out. RSI. If you take a look at the RSI, higher lows. Here was your breakout. Another higher low on RSI. Same deal on prices. A validation here. Indicators of validating price action. I think it's probably going to break out. There we go. And we're good to go. A couple of weeks. Set it and forget it. Is weekly support below. No, the algorithm's not picking up weekly resistance. Here's daily resistance in blue. So when we do break out, if we do break out, this blue line here, I'm going to take it off. I'm going to put it back on. That's your upper band of rising resistance. So if you're day swing trading this and you're looking for a price target at which you want to make profits real, this is it. And that's a rising number, so that's going to change each day. All right, let's circle back and take a look at, well, first let's go to comments. You guys are chatting it up. All right, let's circle back and take a look at how we're settling out on the session. Gold, getting hammered. So that's telling me the dollar is moving up higher. And it is. Okay, let's take a look at equities. S&P 500 gave up a little bit of ground, but holding gains. Hey, Randy. You're welcome, McCarter. Russell 2000. It's also paired gains a little bit here, but still holding positive. Let's go back to the 4-hour chart. NASDAQ. Holding gains, very close to a breakout on the NASDAQ. But the key is, for the NASDAQ to rally, the 10-year Treasury note needs to move up higher. And it is. That means that yields are pulling back. That's the key. Let's take a look at silver. Silver down just shy of a 0.5 percentage point. Frankly, I think precious metals are going to take a hammering at the beginning of the week. The PPI, the two reports to watch, PPI and the Federal Reserve, their announcement, and see how well the market takes to their not committing to taper their balance sheet, and how steadfast they're going to be with saying that inflation is transitory. And the market appears to be buying it. So if they believe that, then equities can move up higher, and gold and silver may just come in a little bit lower. But you know, we began the year at just shy of 2% on inflation. Right now, annualized for 2021, if you annualize it out, we're at about 5 to 7%. We're not going back to 2% or below 2%. So while the rate of growth in inflation may come in a little bit, we're not going back. So that's why I have a problem with the Kathy Woods of the world saying that there's going to be deflation. The only thing that's going to cause deflation is if you have a geopolitical event, God forbid another COVID, a bank going down, something really serious that's a shock to the system. That's deflationary. That will cause inflation to come in some. But then once that is out of the way, because the Federal Reserve is certainly going to act and provide more liquidity, they're going to drive. Once that's out of the way, inflation is going to rip up even higher than before. So whatever government touches, they screw up. So I don't expect this time to be any different. This is a matter of time. All right. With that, folks, everybody have a very, very profitable trading week. Thanks for joining in. Please hit that like button, subscribe to the channel, and again, have a profitable trading week. Be safe. Take care.